Hey, good morning, everybody. It's Trendy John from Simpler Trading. I hope everyone is having a fantastic weekend. It's been fun in the market, and it's about to get even more fun right around the corner. October 22nd, we're having this year's biggest trading challenge. It's going to be Melissa and I. We are going to be hosting a free webinar, so make sure you sign up at the link that I will also put here in the description of this YouTube video. Make sure you click on that. Just give us your name, your email, and then agree to this promotional email. Register for it. It's free. You're going to come in. We're going to tell you a little bit about how we trade, about our backgrounds, our stories, what's been working for us this year. And then we're going to give you the details on what you can expect during the challenge. And what I really love about this, the challenge is for 30 days and then it's pretty intense. Not only are you going to get state of the art API alerts, but you're also going to get a lot of education. And sure, there's a lot of education out there, but is there any real proof of concept? Is anybody else out there actually doing API alerts? That's right. I hear crickets. There's not. These are coming straight from our brokerage account, and you get to see exactly what we trade. But like I say, it's not just about alerts, it's about teaching you something and then you seeing that we put our money where our mouth is. Now, again, the details will be at the bottom. Let's go ahead and get started with this week's broad market analysis. The first thing that I want to start with is going to be this week's US economic calendar. And again, guys, remember that right here, specifically going on right now, data is subject to delay if government shutdown continues. Okay. So let's go in here to Monday. That is tomorrow. Let's talk about what is happening. So, Monday, October the 10th, we are looking at U.S. leading economic indicators. Not much going on. Tuesday, we have Fed Governor Christopher Waller speaking. Wednesday, Fed Governor Michael Barr speaking. Pretty quiet so far. So, again, that doesn't mean we're not going to get some sort of tweet out there or some sort of news that could cause volatility. On Thursday, Friday Eve, we have initial jobless claims, existing home sales, Fed Vice Chair for Supervision, Michelle Bowman, Fed Governor Michael Barr, and then Friday, we have Consumer Price Index, CPI. And again, all this kind of weighs on whether or not we are delayed from the government shutdown. Okay. Now, one piece of information here, the reason why we go over this is just a catalyst that pushes price into our buy and sell levels. And really, it just turns the volatility up. But, a lot of traders are really trying to surgically pick out this market right now and be like, hey, I think this is what's happening. Listen, I told you weeks ago, we're coming into earnings season. That's all this is really about. We're coming into earnings season. The market has given us the opportunity to buy the dip again. All right. Hopefully, you took advantage of that. And now we're just going to maybe sit and wait. But I'm going to give you some details into this week that are going to give you the levels you need in order to trade. What I'll tell you is it's probably more of a hurry up and wait style because we need to hear from the market. We need to see what the outlooks are. And that's going to give us the confidence maybe that we need. And then, after that, maybe you get some kind of information about the government and so forth that will create that volatility in the market. But right now, I think it's all eyes on, companies that are reporting. All right. Speaking of reporting, who is reporting this week? Well, I like to come over here to X and I like to use Earning Whispers. I always have, and it's reliable and it's always here for me. What I like to do is first look at my portfolio and go, hey, is there anything that I currently have on that may be impacted by something that is going to be released this week? And for example, we've been nailing Intel all year long. We started Leaps at the beginning of the year. It's been doing really great. And guess what? They're reporting on Thursday morning. So these are like, this is information I need to know in order to know if I want to protect myself, if I want to take some off, and so forth. So this is why we go over this. But most importantly, and I'll be showing you this during the challenge, I mean, the timing is perfect, folks. The market's different. People need a lot of help. But they also want to learn stuff. And I love trading into earnings. And I'm going to show you how I do that by using Trendy Methodology. So we're really kicking this year's challenge off perfectly. Let's look at some big names that I'm interested in, and maybe you're interested in as well. And that would be right here on Tuesday, after the close, Netflix. And why am I interested in this name? Because it can move. And so I want to break down the chart. I'll be looking for levels and, showing you my methodology to trade that into earnings if the risk to reward is there. Texas Instruments is also reporting on Tuesday after the close, and they typically have a little bit of movement as well. So I am interested in them. And then, most importantly for me, just can't wait till Tesla, who is going to report on Wednesday afternoon. Be interested to see what they can do. I'll be doing a video this week for this week's watch list, specifically on Tesla and Intel. So look out for that if you are part of Simpler. Okay. Moving on, other than those names that I just went over, I really don't have a whole lot of interest in anything else that's on here at the moment. If I come across something or somebody brings it up in the room, I'll be happy to go over that. Okay, let's go ahead and move these out of the way. And let's get into the charts. Let's get to the SPY. And what I like to start with here is the bigger picture. So when I say the bigger picture, I want to be looking at the quarterly. All right. Now, the quarterly is really important because we had a projection for this year. And those projections, I did them through the futures, but you can see them here on the SPY as well. Projection basically puts me in the 675 all the way to 743. We know that, here on the monthly, we've been going up 1, 2, 3, 4, 5 months. And if we get up and over this body, that would be 6 months, right? Now, this is not unheard of. It's sort of unusual, but it's not unheard of, and we could continue to move up all the way into the year end. Okay, pretty crazy if you think about it. But let's take a look at the quarterly as well. And the reason why I want to show you the quarterly is because we want to focus on this. I want to focus on this when I'm thinking about my portfolio. If everything's looking pretty good on the quarterly, I just want to keep staying long. I want to buy the small dips that we've been having, and I want to look for the move up into the projection. Now, last week, things looked a lot different. It was looking really ugly. We had a big topping wick, and you guys can see by the end of this past week, and I'll show you here in a minute, things kind of basically came right back to where they needed to be right before this earnings season. But going forward, as far as a quarterly is involved, I want to show you what I think is the most important. First of all, these two levels, the Fibonacci levels, 23 and 38.2 of the range that I am measuring, I want those to be support. And if for some reason we have a big pullback before the year end, I think it's going to be a quick dip buy. And I think that things start to look really good before the year ends. And even if they don't, that's okay. We're really, I guess at this point, I'm really light in my portfolio, especially because I'm getting ready for the challenge and I wanted things to kind of, start over, if you will, and show you the progression and the growth that we can do and the education that we can give you during those 30 days. So I'm really light at the moment, if you will. Now, really light is perspective, kind of depends on what you think is light. I still have thousands of dollars in the market, but I have laid off in this specific account right here, just to make sure that my mind is clear and I'm ready to rock and roll with you guys when we start the challenge, okay? On SPY, again, this 9 EMA on the quarterly, this is where I think you keep your eyes on this because there is a lot of diversion between the 9 EMA and price. Doesn't mean we have to come back now. I think the Fibonacci levels hold us into the year end, meaning I don't see us breaking down under the 618, and even if we do, I believe that buyers show up, and I'm still looking for my 2025 projection, okay? Now, that's the quarterly look, and again, we want to look at something a little bit closer to home, so let's go into the weekly and talk about it. On the weekly, I want you to notice that we came back to the 9 EMA. We found support there. That's pretty common in a bull market, and you can see that our overall trendy Fibonacci right here telling us what the trend is looking really good. Okay. Now, our over under for this week is going to be the monthly edge. And that is around 663.66. So basically, what I'm saying, if we're over that, I'm day trading to the upside. If we're under that, I could be day trading to the downside, or I'm looking for an area to buy that we will pick out on the charts together in the morning session. Reminder, if you're in the room, we get started an hour and a half before the market opens. Okay, that way we can have detailed charts, know exactly what we want to do, and have our intentions and our expectations set forth before the bell rings. Okay. If we were to get over 671 and a half, obviously I'm looking for a high probability that we will make a new all-time high. If we were to come back, I would be expecting prices to hold between 655 and 650. Okay. Again, I think it could be choppy until it's not. So I really want to emphasize uh, that this week is more of an intraday look every single day, but keeping our eyes on the bigger picture. Okay. If things take out the highs, we could see extension targets, and we'll talk about those when that happens. Okay. The next thing that I want to be looking at is going to be QQQ. So let's go ahead and take a look at that as well. And we'll just jump into the big picture. So on the quarterly, I mean, look at it. Here we are again, 1, 2, 3 quarters up. We're in the projection area, if you guys recall. I'm looking for 618. We've gotten really, really close to that already at 613. If prices were to pull back, I'm looking for, let's see, we want to actually pull this up just a tad, all the way up to there. I'm looking for prices to hold around 589. If we were to get a really strong pullback, I'm a huge buyer down here around where the 9 EMA is. Not only is it confluent with this golden pocket, but yeah, it just for me would be an opportunity to buy. Okay. So I want to keep my eyes on that as far as the quarterly is concerned. Let's go ahead and jump into the weekly. You'll notice that the weekly didn't come down to the 9 EMA. Now, if you understand how EMAs work, most likely this will start to continue to push up a little bit. And it will, say in a week or two, look like we've touched it. It did not come back and touch it though, like the ES futures did, or sorry, the SPY came back and touched. So it's a little bit different, and it does, in the back of my head go, hey, we didn't touch it. There's a possibility we could come back and revert back to that 9 EMA. So just keep that in mind on the weekly. Now, far as this week goes, we came back into, or this past week, we came into what we call the bull channel. We're expecting buyers there. That's exactly what we got. Okay. If we can get up and over, so this is a really cool aspect of how I do things when we're teaching structure, is that this is an inside candle, and the big key, whether we go long or we go short, is all about the inside and up and the inside and down. So if you don't know what that is, there are two major levels for this week on the cues, and we will go over that right now. Okay. So right above here, right above that body, that's where we go inside and up. Right below that body is where we go inside and down. Okay. So inside and up, inside and down. That is your over under for the inside and up and inside and down. So if you're intraday trading and we move up over that level, get ready to rock and roll. If we go underneath that, you can look to go short. But everything between that is a little bit choppy, and that's why we use our famous PMZ indicator, which really works really well. It kind of keeps you, in the game, if you will, if you want to continue day trading. Okay. So if you just hover over this, I'll give you a rough estimate here. It's about 604 to the upside, and to the downside, you're looking at 599 and a half. Okay. So those are the two major numbers right there. Far as Fibonacci is concerned, again, guys, I think we hold the 50 and 618. I don't see anything pressing far as like earnings go, anything like that that would give us a huge pullback. But again, I'm open-minded. I just don't see it far as earnings names that are reporting this week that we would get that much of a pullback in the Qs. If we do, again, I think it's a buying opportunity. Okay. Let's go ahead and move on. We are now going to look at the dollar. The dollar is really important. It's really helped us. It always does. And so we're going to put in the dollar sign DXY. And I like to use, give me one second here. Where'd you go? Dollar DXY. And it's for some reason is not popping up. Give me one second here. It usually does. That is really odd. It should give me two choices. And for some reason, it is not. Huh. All right, well, that's okay. We will pull this down right here. And you guys will see right in this area, this is the chart that I'm looking for right here. It's DXY, and then I think colon IFUS. But here it is right here. It's an inside week in my notes. Really simple. Inside week over 99.5. Use caution under 98.2. Risk on. Okay, we'll keep it that simple. Next thing we're going to be looking at is going to be the TNX or the 10-year Treasury. All is going well. This is exactly what we're looking for. I was looking for it to break down. I'm still looking for 3.8. Once we get here, we'll talk about it. There's nothing really to be concerned about unless we get over this red box or we break down below the green box, okay? So all is going well there on the 10-year Treasury. Nothing to really report on there. Let's move on down to the skew. So the skew is really important. It's a big part of my overall analysis. I was getting pretty excited about more fear coming into the market. Now, far as the fear and greed, we'll show you that here in a second. It's still showing that there is quite a bit of fear out there. But once we broke down out of this channel or the sideways action that I talked about, things started looking scary, right? And I was looking really forward to adding into this area built off of that fear and looking for a rally, but they kind of stalled. The skew pushed back up towards this area, and we came in this week sitting at 147. So you can use the skew index to kind of adjust your portfolio. All right. If the skew is high, you might consider buying protective options. So insurance, buying puts, right? And high is up here towards these red areas. And that's why I said, there's been a long period of time which is sitting here without being at extreme levels. And me personally, I love when prices of the skew are up here or down here. That's where the bigger opportunities, in my opinion, come into the market. But they're just hanging out in this area. And I wouldn't expect much difference going into the next couple of weeks just because, again, we're lining up for earnings. So it's kind of a hurry up and wait situation. All right. Um, Conversely, a low skew might indicate complacency in the market, and lower perceived risk, so prompting, different strategies, if you will. All right, but big thing here, we're just kind of in the middle again. All right. Next thing I want to show you is going to be the fear and greed index. And the reason why I go over this is because it really just kind of ties into everything I'm showing you. The markets are after a move down, you know, what happens is that everybody's looking for excuses. They're looking for catalysts, and they run to news agencies or YouTube videos, right, and try to get an answer. I'll be the first one to tell you I have absolutely no idea um, what it is going to be the sentiment based off of news. We use price action. We are technical traders. I teach strictly technicals. I do not watch the news. It's not important for us to try to dissect what's happening in the news. It's important for us to be aware when certain events are coming out so that you understand that volatility has turned up. And volatility has a big impact on options trading, right? Especially if you're selling credit and stuff like that, which we do that as well. Okay. Outside of that, guys, the fear, this just means retail traders basically at the end of the day, which is you and I, the people who, not me, but the majority of people who feed into news. They just get scared. They start selling off. And then typically these are the type of people who are buying puts at the bottom just to watch market go right back up. And they're kind of caught off guard. So when I start to see the indicator, especially going into earnings and the extreme fear and fear, I'm thinking opportunity to kind of like pick out my favorite stocks, but also be patient and maybe start to scale in. Okay. So right now, the masses of participants are basically fearful. I'm not telling you not to be fearful. I'm just saying that I think it's more of a sit and wait situation because of earnings. Okay. Next, what we're going to be looking at is, give me 1 second here. Let's pull up the ES futures. Okay. So this is one of my favorites because we trade futures every single morning. So if you're one of these traders who's looking to like, I don't know, pass an eval in a prop firm, or you're just trying to take your trade to the next level, we got you. We trade probably for the first 30 to 45 minutes on the ES and the Nasdaq futures every single morning. If you trade micro futures, which I really highly recommend, is that you get into micros before you even step into the mini chair, because that can be quite frustrating for new traders. Trade with smaller size. I'm going to teach you a strategy during the next 30 days of our challenge that will really help you out. Okay. But we're going to go from the top down here. The weekly is an inside week, and the same thing. If you just take the body itself, you're inside and up over 6712, but there's something really big about this. There's a lot of confluence. If we go up over the body this week, we're over the 618, which is a really big deal. So if you take your anchors of your Fibonacci and you place them here and here, moving up, we're above the 618, which is a really big deal, and I teach you that in the room. The next thing is there's also a trendy edge under there that you can't see. We're also confluent with that. So if we get over this level, which this is kind of where we stalled on Friday, we are inside and up, we're above the 618, and all leads to higher prices. Okay. If we break down below 6630, we're on an inside and down, and we'll talk about it when that happens. Basically, between this line and this line, it's neutral and more intraday trading strategy. Okay. And that's what we'll be doing with you in the first 30 to 45 minutes in the futures every single morning. Okay. Next chart is going to be your daily. The daily has a bunch of triggers on it. As a disclaimer, like I keep saying every single week, that doesn't mean that I just close my eyes and throw on a trade. Unless I'm okay with the risk, right? If it's at my level and I'm okay with the bracket order, I'll just take the trade. However, the way that I teach this and the way that I want you to look at it is if we get to a level, say that prices move up into the short trigger, I'm looking for signs on a smaller time frame to throw that short on. Okay. Or maybe if we get to the short trigger, I'm doing something that has more defined risk, meaning like I'll do like an options trade, sell some credit up here, some SPX credit, things like that. But I want to look at the smaller time frame when we get to the triggers. Just like if we were to drop down into a buy trigger or trigger long, again, I'm going over to a smaller time frame and looking to see if there's any signs that buyers are actually showing up. Okay. So that's what we have on the daily. If you want, you can take a snap picture of this, throw these on your chart, see how they work out. And then the next thing is the 4 hour. Now, the 4 hour, basically what it's telling me is that we're just basically digesting after a big move down that happened last Friday. And you can see they did pretty well, but really, price has gone nowhere. And out of that, I can't really say whether or not I feel really bullish, but what I can do is help you, and that is just put a box on it. When you're higher on the curve towards the top end of the box, be careful. If for some reason we get lucky and we pull back towards the bottom of the box, that's where I want to be looking to get long. So again, trade the major curves, if you will, the upper curve and lower curve of this range. And it's not until we can build a base above this box, if you will, before things start to look better for bulls. And it's not until we build a base underneath, or I shouldn't say build a base, or we break down underneath and have lower lows that I actually look for lower prices. Once again, it looks like a holding spot before you get into earnings. And that's exactly what it is. So let's just trade the intraday, if you will. Okay. Next, we're going to look at the NASDAQ futures. Let's go ahead and take a look there. On NASDAQ futures, we'll do the same thing. We'll go top-down approach. This is a weekly. It's an inside week. Same exact thing. Or sorry, I apologize. I didn't mean it was an inside week. It's not an inside week. I did go back and I back tested and looked at this type of candle. We pulled back to the 9 EMA on the NASDAQ, 2 weeks ago. And we pushed up, and this is not an inside week. And a lot of times, this type of candle, I went back and looked a couple years. More times than not, this kind of candle actually leads to higher candles, continuation candles to the upside. Okay. Again, not a guarantee, just something that I noted. The big thing that I want you guys to be aware of is the 618. So it's basically your over under. If we're above it, look to stay long, especially intraday above 24,930. If we're below it, be careful. 618 is very important. I got it by anchoring our Fibonacci's from here to here. And again, we came above the 618, so we're looking for the 88.7. Let's go ahead and move on into the daily. Again, we have triggers. We have a resistance trigger that's coming in around the trendy edge. We have a short trigger that's coming in to the previous trendy edge, and you can see there's an inside and down formation there. But importantly, on the daily, we had a green arrow. Let's see if this continues to the upside. As you can see, most green arrows do. It's not a guarantee, but it did show up and it stayed there at the end of the day. So we could be looking at a gap up. We'll see. All right, just a couple, I shouldn't say a couple hours, but about 7.5 hours from now. Okay, we'll find out. Go ahead, take a picture of this, throw it on your charts if you like the levels. Again, it's not a, it's not 100%, but they work really well. And if price gets there, I'll go to a smaller chart and we'll check it out. All right. Into the 4 hour, the thing that I didn't say about the ES futures here is what I'm doing is I'm using our upper and lower weekly edge, and then I'm also combining the past edges. And if you want to, you can just create a zone on both ends. These would be your trendy buy and trendy sell zone on both ends. So be careful. You'd be getting higher up into the upper end of the curve. I would expect prices to come back down a little bit. And if for some reason we were to break down all the way into here, this is where I'd be looking for buyers to step in. Okay. Overall, though, we're still in a holding spot, just like the ES futures. All right, now let's finish this off with Bitcoin. And if I haven't asked you already, go ahead and hit that like button. I really appreciate it. And if you have any comments or suggestions or anything you'd like to see, go ahead and drop those in the comment section on this video. Okay, so let's go ahead and go into Bitcoin. So Bitcoin's been taking a little bit of a breather, if you will. It was really exciting when we got up here at 127,000. We were so damn close to our target already. And quite frankly, you don't necessarily want to hit your target, 3 months before the year ends. I'd much rather see this pullback just like we're seeing. The question is this showing us what the ES and the Nasdaq or the market could be doing going into this year, like a little bit more of a deep pullback? And then perhaps, again, I think that we end the year on three white soldiers, 1, 2, 3, like this. And if you've been watching me for weeks, you know that I was projecting this. I was looking for it to pull back first and then swoop in, buyers come in, and then we end at the 2025 projection. As a disclaimer, this is not a guarantee. I would hope that you guys know that, but this is something I'm looking at and it has a higher probability of happening. Sure, the 9 EMA is down below and we could come all the way into this area. I don't know. I am a crypto trader and I do hold Bitcoin. I say trader, I'm a holder. And one thing that I feel like I recall is that around Thanksgiving, it's always like it's not the best conversations around Bitcoin. Usually like we have pullbacks. So I'm thinking that the pullback could be something that we talk about a little bit later. But again, I'll be looking for buyers to come in. If for some reason we don't finish with the three white soldiers, typically, we'll find January through March to be pretty bullish. So anyways, that's what I have for right now on Bitcoin. The big key here is the daily is interesting. So 2 weeks down, 2 to 3 weeks down, I'm looking for a bounce, right? So we come over to the daily, notice that we have 1, 2, 3, 4 days down right into the 200 SMA. And then we had a little bit of a bounce. I would really say that the 200 SMA is your over under going into this week. But if we were to push up, just understand that there's resistance in this level. I would expect resistance. If we get up and over it, that's awesome. If we break down below the 200 SMA, I'm looking for a possible move into 101 all the way down to 97. All right. If you guys have any other questions about any other crypto, just let me in the room. Let me know in the room and we can go over a chart. I can pull it up on TradingView. Okay. Now that sums up this broad market analysis for this week. I hope you enjoyed it. And if you have any questions, please let me know. I'll see you in the room tomorrow, 90 minutes before the market opens. Talk to you soon. Bye.